Good morning, traders. It is Friday, July 26th. Taking a look at the charts, we got the SP500, and we can see here on the daily chart on the right, we've had a nice rally up, a 3-day rally. We've pulled back near the recent highs, and we're riding on this 5-day, this baby blue line, this 5-day moving average. Hopefully, we'll get a launch and we'll push up to some new highs today. If you go back to our trend analysis chart in our signal chart, you can see we got these lime green areas. That's when the market falls into an oversold territory, which we got long. We came up, we hit our first target this week, locked in our gains. Your stop should be moved back to our entry point now, so that if price does start to roll over, you just get taken out at break even for the second half, and we lock in a winner. But overall, if we take a look at this price action here, we do have a nice rally over the last couple sessions. Yesterday, a nice pullback, which looks like a bullish formation, a bull flag, and our short-term cycle is showing we should see an upward bias today in the equities market. Now, what's kind of interesting is yesterday we actually saw some pretty good panic selling in the market. We got up to this 3 level, this blue line, and when we get up to that level, that usually means the market's putting in a bottom. It means people are panicking out. There's 3 people selling shares on the NYSE to every 1 person buying. And when it's 3 or higher, it's usually a level where there's fear in the market and people are panicking out. And it's usually a short-term bottom. So we'll see if we get that. Markets are trading up 0.25% this morning. And we'll see how things unfold and if we start to go higher going forward here. Now, if we take a look over at, let's move over to the other markets. Yesterday, the previous session we saw, 2 sessions ago, we saw everything move up together. We saw stocks, everything moved in our favor in one day. Yesterday, it was the opposite. Everything sold off yesterday. And so if we take a look at the SP500, obviously yesterday was a pullback. If we go and we take a look at gold, gold was a pullback. It's kind of hanging on to the upper half of this consolidation above the 20-day. It's trying to hold its ground. I've talked about how it's going to want to naturally run down and flush out these pivot lows. Yesterday's low will be significant. This low, and this other minor low. I wouldn't be surprised if we see it start to flush down and cleanse itself. But again, it's still in an uptrend. It just likes to run some stops before it continues to go higher. If we look down the lower area, we do have short-term oversold territory, so we could see gold rally at any point here, and that's what we're looking at is potentially this uptrend to continue and go further. But it is showing weakness. This was a big reversal day, and it continues to show weakness with some elevated selling volume. So I'm a little bit bearish here, expecting price to potentially pull back and flush out more. If we look over at silver, silver's had a nice pop. It's we talked about it holding under this 1675 area, that it could very easily consolidate and trade back here and maybe pull back. It's had a really nice run. Usually after a run this size, you see some type of consolidation before it continues to go higher, and that's what it looks like it's starting to do now. Miners, GDX, GDXJ, both looking similar. If they've started to kind of drop down and kind of flush itself out, I do feel as though there's still, again, some more potential downside and consolidation here. Still very bullish, but it's overdone, and we're seeing everyone who piled in these last 4 trading sessions, it broke those candle lows. Hard to see maybe, but you can see these candle lows here as it broke that yesterday. Lots of stops being triggered, and it creates that added downside pressure in the market. Looking over at crude oil, up 0.8%. It's still flagging out in this between this floor and the ceiling, these blue horizontal lines. It's in a bearish formation, and we'll see if it's going to eventually roll over. We are under all the key moving averages still, the 20-day, the 200-day, the 50-day, flirting with the 5-day. So there's a lot of different moving averages there. We'll see if we do get the eventual rollover. Obviously, a lot of news kind of rolling out over the next today and yesterday and the next few trading sessions. So it's probably going to be pretty volatile in the markets, all the markets in general. But again, this still has a downward bias, and we're just kind of waiting for it to break down and pick up speed to the downside. If you take a look over at natural gas, down 1.7%, continues to kind of grind its way down, coming down to this potential 215. We talked about it actually right over here that we were expecting some type of bounce back up into this 245, 250 area, and then for it to come back down later this summer to the $2 mark. $2 mark is down over here. So there's potential for it to really get down here later this summer, and it could be an amazing opportunity to get long natural gas when it gets down to that level. Hopefully we'll see it continue to grind down and pick up speed with some type of parabolic kind of hook where it grinds lower and then suddenly just collapses and drops. Something similar to this where it kind of goes straight down into that $2 level we want to get in because you get a knee-jerk reaction out of there, a very significant level. So that's kind of what we'll be looking for for natural gas when we get down to that area. Taking a look over at bonds real quick. Bonds continuing to hold up. They've got a little bit of mixed signals. It's pinched between the 50-day and the 20-day, trading sideways. It's in this kind of range. There's a few different areas here, but more or less it's stuck in this kind of trading range where this is resistance above, it's finding support down below, and overall we're just kind of letting it do its thing, and it's kind of chopping around. It's still a bearish pattern at this point. It's moved down, it's trading in this range, and we'll see which way it goes, but it is building a base here that if it does break to the upside, then we're probably going to see it continue to go up and go higher if the equities market starts to roll over. But if we do see a breakout in a rally today and next week in the SP500, we're probably going to see bonds pull back and do a three-wave correction, a nice A, B, C correction. It's the break of the B wave to the downside that creates the trigger, the flush, everyone gets out. That's when it puts in the next rally is after that point. So we'll keep our eyes peeled for that type of setup. Anyways, that's really it for this morning. We're kind of holding our positions, letting the market do its thing, and we'll play it one day at a time. Talk to you soon. Bye-bye.